Hello and welcome. You have tuned into Midcap Masala right here on ET Now, and let's talk markets then. And yes, of course, there has been a decent recovery from the day's lowest point when it comes to Nifty as well as Nifty Bank. And as of now, but we are still holding on to the cuts of almost 112 odd points, while for Nifty Bank as well, it's more than 300 points of decline is what we are getting to see. But along with that, what was also interesting to see is that move in the pharma counters, because you remember that pharma companies' earnings specifically, no company as such has really disappointed on the earnings front. And given the market move and the momentum right now, where there's so much of nervousness, people are really having and making that bet on the defensive side. So pharma is definitely one such sector that is holding on well, and even the IT pack is doing very well. But apart from that, Snehi, seems like that all the other sectors are definitely hammered, taking cues from the global markets, of course.
Absolutely, and that handover has also been largely mixed when it comes to the global markets. We were bound to open under pressure. That's what the GIFT Nifty was implying, and that's where we're at, even struggling to hold on to that 23,500 mark now. Like Shrishti mentioned, it's pharma, energy, oil and gas, auto and IT doing well. But on the flip side, you've seen some cuts on FMCG and banks. But let's refocus and keep it going with earnings conversations. We've got the management of CE Infosystems or MapMyIndia joining us on the show. We have Mr. Rakesh Verma, the co-founder, chairman and MD of the company, who've joined us on the show. Thank you so much for your time and also take us through how the quarter has shaped up for you. Because if I take a look at your earnings, sir, in the quarter gone by, it looks like a largely mixed set. Your consolidated revenue growth has only been about 1% on a year-on-year basis. On the flip side, your order book has been very strong. Can you help us understand what the mismatch is, and by when can we see more of this order book get converted into the top line?
Yeah, let me first answer your question, and then I'll add something to that. The year-on-year growth you're talking about for the quarter is for the year is 1%. The order book is quite strong, and this order book gives confidence a lot to us, and I'm sure it will give it to the investors, that with these strong orders, we are in a position to deliver and execute in the coming years, including the current financial year, FY26. Just giving you a perspective, since IPO, it has been 5 long years. Over these 5 years, if you see revenue growth, CAGR has been 24%. The EBITDA growth CAGR has been 19%, and the PAT growth CAGR has been 11%. Now that's the past, but that's how with the strong order book, we see a very good future, and we are very bullish about times to come.
All right. Morning, Mr. Verma. This is Shrishti also joining in, but just wanted to have a word on your IoT margins. That expanded sharply to 33% in Q4, and SaaS margins rose to 66%. What is the sustainable steady state margin profile for IoT business, and how large can these segments become going ahead and form a percentage of the consolidated revenue maybe in the next 2 to 3 years?
Okay. Yes, we had been talking about that induction of IoT business in our company was a strategic move, and I'm happy that all of you have patiently watched this growth. The entire IoT business is going to keep increasing at a very fast pace. It is a market where we are will become a leader in a few years, if not too far away. Map business has already been we have been the leader, and added to this IoT. Now the question you are asking is what percentage? First, let me say the IoT margin has increased from anywhere almost 0 to 3 years back to what numbers you just described. The IoT margin will keep increasing and will also start in its software services part, what we call it operating leverage through the SaaS model or subscription model. So it will be an important part of the entire business.
Okay, so point taken. Mr. Verma, let's also talk about the automotive and mobility segment. The revenue growth over there has slowed slightly in Q4 despite healthy vehicle additions. Can you help us understand if this was due to pricing? Are you seeing any OEM delays, anything playing out on that front, or lower content per vehicle?
Uh, it, I don't think it has slowed down much. Probably it is muted, and I think it will continue in a better shape as the quarter goes by. Yes, there were some delays on some technology front, but we have overcome that now.
All right. Along with that, Mr. Verma, your government subsidiary, that is Mapple's DT, appears to have stabilized. When can it become meaningfully profitable? And are payment cycles and receivables improving in the government segment?
Good point. As you all know, the listed companies, MapMyIndia, which is primarily looking at the auto and corporate, the subsidiary Mapple's DT is looking at the government business. Yes, it is now fully operational with its own team, with its own board, and they have reached a stage where they can keep growing also at a very fast pace. The question about profitability, they have achieved profitability last year in a standalone Mapple's DT financials. So they also need to have the operating leverage. So in the government business, to achieve the operating leverage advantage, the revenue has to be higher, or let's say 50% more than where it is right now.
Okay, understood. And we'll be watching out for more on this front as well. Mr. Verma, on that note, thank you so much for your time. Congratulations on the quarter you've seen and good luck for the quarters to come. We hope to keep interacting with you.
Thank you.
Thank you so much. Okay, viewers, on that note, we're completely timed out on this edition of Midcap Masala. From everyone who put their show together, thanks so much for tuning in. Stay on to ET now because Buy Now, Sell Now is up next.